And the market does tend to trade ahead of the economy. So I think that they are building in the fact that there will be efficiency in these vaccines coming up in April, right? This is just anticipation. This is positive news overall for the economy and for the market. However, the reality is they're not going to have the total number of vaccines available till the end of December, right? And that's for the most highly vulnerable people. The rest of the US economy, at least until the end of March, beginning of April. We always see that there's money flowing out of certain sectors and into other sectors. So such things like Biden saying that he wants to get rid of fossil fuels and move more into electric energy. We're seeing that flow happen already. There's always opportunities. It's being aware and looking at that big picture of the market. Where is the money flow going? And being able to capitalize on those undervalued stocks in those sectors and moving forward with those. So even though we had COVID happen, what happened? The tech sector ended up being super strong throughout all of this. We do have the impending potential shutdown again, which could mean that that sector of the technology stocks might end up increasing because everybody's going to go back to working just virtually again. However, maybe it's going to be the exact opposite. People are anticipating getting back to work. They want to circulate. They want to be out in person in their offices, traveling again as well. And so we might see that that sector has money rotate out of it and into another area, potentially into commodities of gold and silver as well as a safe haven, because what might happen and likely will happen in the new year with the new president is that we'll see another stimulus. And that could drop the value of the US dollar by increasing money into the hands of the US population by printing money with the stimulus. We also have the Fed buying $80 billion worth of securities every single month. That automatically is putting more money back into the hands of the US population, trying to stimulate it. So seeing that we are going to likely have another stimulus, that has helped the market. Having the Fed buy back the securities is helping to keep it up. There will be certain sectors that will be hot and there might be more momentum to them. And it's going to also be a viewpoint. Is somebody trading as a trader or a long-term investor? What is their viewpoint in getting into the market? Even looking at Zoom now on the weekly chart, if you're looking to get into that longer term perspective, a long-term investing, you have to take that larger viewpoint. Where is it on that big picture? So I would look at more the weekly chart, the daily chart and weekly chart to see, yes, right now we've come back down to a potential area of investing long-term for Zoom. We've come to a longer-term upward trend line and we're bouncing off of it now. So it has already had that pullback. It was up almost at 600. Now we're down at almost 400. So you see that it already has that discount into it of roughly 20% off. That's a nice discount, right? That's a Black Friday sale for Zoom. So looking at that, there will be some that are going to pull back to a natural, healthy pullback to an upward trend. And when it gets there, yes, it would be likely a nice opportunity. As everything with the technology and the technological evolution, we're seeing that business is happening more virtually than in person. However, I think the in-person will never disappear. So it will come back in that arena after the vaccines are out. But for now, until we get there, yes, they've had a pullback. Hey, vaccine, the market spiked, tech's dropped. Is it going to equalize again? I think likely we will see it equalize again, that those tech sectors will pick up. Now, where are we going to see further pullbacks? We might see further pullbacks in, Microsoft, Apple, which could pull back on the index of the Qs overall. Personal opinion, looking at Boeing, personally, as someone that knows people in aviation, I also go by Airplane Jane as well. I'm a registered pilot and I worked in aviation, for a couple of years. So great question to ask. And I know people that have flown the Boeing 737 MAX. And it's not just necessarily a software issue that needs to be fixed. fixed. This is also something of center of gravity that creates issues with lift and stall. And so it's not something as simple as let's put this sensor on the aircraft. It's inherently built to be a fuel efficient aircraft. However, the location of the center of gravity can create it to stall more easily, which is what happened with those crashes, meaning that they were pulling up and it dropped the lift, the airplane stalled and pretty much fell out of the sky. So that inherently is not safe, and we might see further issues with other crashes to completely ground the aircraft and go through an entire redesign. You know, I think that we are still a bit overextended right at the moment. We had the news of the vaccine. Looking in the shorter term picture, looking on the daily chart of the S&P 500, the SPY ETF, that we see that we have a bit of a gap up. We have a bit of an island up there where we could pull back down to roughly 335, and that wouldn't be an unhealthy pullback to then regain some momentum, go into new highs into December, and then a pullback potentially down into the end of the year, a bounce in January, another pullback in February, and then surge higher from there. Something else to consider is if that stimulus package happens, that would likely create new highs, new interest in the market as well, and create inflation, right? With inflation over time, stocks naturally rise. People are going to be spending more. It's going to increase the price as well. So with the stimulus continuing, with the Fed stimulating the economy and buying 80 billion back of securities every month, it will likely be hitting new highs, I'd say in December. However, I would anticipate a pullback into the end of the year. And in the new year as well, we have to be conscientious that it's not just COVID that's going on. There's also bankruptcies, there's personal debt, there's business debt that's happening from all of these businesses that are being hurt with COVID. How is the US going to be able to stimulate them? When we look back at the Spanish flu, stimulus didn't just work. They had to work on infrastructure and create jobs. So that's another important aspect. We cannot just go into printing money. It has to be something further in getting people back to work to create the economy rolling again. Stimulus is great, but you need to create those jobs so that unemployment does not continue to increase and personal bankruptcies increase as well. We're starting to see a slow increase now. It went up January, February, March, dropped a little bit, and then starting in September, we're starting to see that rise again.